All right, how's it going, everyone? Welcome back to another video. Today's video is going to be much different than my typical video. Usually I've been showing you guys what I do throughout my day, what I spend, what I buy, how I make my money. In today's video, I'm going to be diving in on how I make my profits trading every single day, how I stay consistently profitable, what strategy I use. I made a couple videos about this in the past, but it's been a while since I've given you guys a more recent update on how my trades have been going recently. I live trade every single morning with my team, so I'm pretty updated with them, and that's where my priority is. But I thought, oh well, I have 3 hours. I gotta stay up. It's 1 a.m. right now. I have a flight to the Bahamas later this morning, so I might as well pump out some content for you guys. Comment down below if you want more videos relating to specifics about my trading strategy or what I do throughout my day, and I will keep giving you guys some content here and there. Let's get right into it. All right guys, so let's get right into it. And because today had great examples of what I'm going to be discussing in this video, in regards to my trading strategy, I want to go through my trade today, where I went wrong, how I could have done better, and where the real setup truly was. As you guys can see, CNEY, this was a ticker that I had my sights on since I would say around the 23 cent mark, right around here, maybe 10 minutes into market open. Okay, this is going to be my ideal setup here. I want a pre-market runner that did quite well in pre-market. There's nothing really too specific about pre-market. I just wanted to open, a good percentage, a good 20 to 40% lower than it did in pre-market, which in this case it did. It opened at 23 cents. The high in pre-market was around 30 cents. So that was solid for me. It had good volume, good momentum in pre-market. That's also a pretty good requirement. And then we come down here into market open. We upper wicked, came down, consolidated around that 22 cent mark. I was watching it throughout here. I wanted to see if it would accumulate, begin accumulating, and it did. It swept under this 22 level. Now, this is where I'm watching it very closely, right? If it were to reclaim this 22, 23 level, I'm going to be watching it very, very closely. It would be setting up as a great watch. Now, I mentioned it to my team around this area here. I said, okay, I'm watching this. This is my top watch here. If it continues to set up and we continue accumulating, I'm going to be taking an entry on a breakout. What happened was it came down, swept, grabbed liquidity, which is a great sign. While everyone is focused on playing the high volume, high momentum tickers, I'm focusing on finding a stock that's accumulating into market open. I want it to have good room. So I want pre-market high to be a lot higher than what it is currently trading at into market open. And I want it to be accumulating, setting up for a later run. So that way, when the volume drains out of the top gainers that everyone's focused on trading, this stock will, get volume poured into it. I'm going to be early because I would have been watching it early. I never trade momentum. I never trade any of the volume tickers, the ones that are just exploding into market open. I let everyone get stuck on those, get chopped out on those. A lot of people make a lot of money trading momentum. It's just not my style, right? If you look back at the videos I have from 4 or 5 years ago, I was teaching swing trading. I was, teaching due diligence, and swing trading mainly comes from spotting accumulation, buying into the accumulation. You could either buy at the lower range of the accumulation or you could buy the breakout. And I applied that to my day trading. And this is the type of strategy that I've come up with. And so far for me, it has been working absolutely amazing. For the last year, I'd say I take about 3 of these trades a week. Some days we don't have any ticker that sets up in a solid way and accumulates into market open and is far from pre-market high. But, I'd say maybe 3 out of 5 days of the trading week, we do have a setup like this. And if I catch it and if I spot it, which 90% of the time I do because it's very obvious to me which one it's going to be. For example, we'll look at today. As soon as we broke above VWAP again, right? Reclaimed that 23 level. I took my entry on this red candle right here. I believe my average was 0.238. As you guys can see, my average was 0.238. And at 7:01, that is when we had this boner candle. I was in maybe 2 minutes before. I ended up holding it past this candle here, and I ended up getting stuffed on it, unfortunately. And I believe that's only because there was another very similar setup as CNEY, which fit all my criteria, and that was MEGL. Now, let me describe why this fit my criteria for these accumulation tickers. As you guys can see, pre-market high all the way at 250, and it went into market open trading at around 170. So that works out pretty well. Now, I wanted to see if it would accumulate into market open. Unfortunately, it went up, which usually most of these tickers that I trade don't go up into market open. They usually come down into market open. That's what I found the trend to be. That's where I find accumulation occurs the most. And that's why I didn't pay much attention to MEGL. And I thought the ticker would be CNEY that just absolutely rips all the way to pre-market high again, which would be at 30 cents. Obviously, that didn't happen. I ended up getting stuffed. I took a loss at around 0.225, which isn't too bad at all. That's another pro of trading these accumulation tickers. There really isn't that much room to lose, right? You lose a lot more trading momentum tickers than you do trading these accumulation tickers. Your loss will, at most, if you're doing things correctly, be 10 to 15%. Timing your entry, timing your exit, you should not take a big loss. If you're trading momentum and you're trading these tickers that are just absolutely ripping, your loss can be as big as 30, maybe even 35%. That's a little, exaggerative, but most of the time it's going to be around 20-25, but nothing as good as these accumulation tickers. Now let's get back to what I was talking about before. This ripped into open. That's why I didn't pay much attention to it. My focus was on CNEY, but it also did accumulate very, very well. Now at this point, I don't think I was even watching this just because I was in CNEY. I ended up missing this trade here, but my partner Minnie, coincidentally, ironically, never really trades these types of accumulation tickers. He actually took an entry on this at 183 and based off my strategy, right? He's usually always trading momentum. As you guys can see, ZVSA here, this was a full momentum trade. If you guys want to take a look at what a momentum trade looks like, this is what it looks like. See, just absolutely ripping into open, going all the way up. I would never touch this type of setup here. But, he did take this MEGL 183 breakout based on accumulation, based on my strategy, and it went all the way to 209, which is where he took his exit. It was a great trade. I missed it. I was stuck on CNEY. In my experience, it's pretty rare for me to miss one of these accumulation trades. I think I missed maybe 2 to 3 out of 10 of the trades that I take, but sometimes it happens. I still think CNEY was a great setup. I could have easily taken profits in the 25s and my entry was 0.23. So a 2-cent gain, around 10% on a stock like this still would have been great. Yeah, but I thought this would be a great experience to show you guys, okay, here's what worked versus what didn't today. Now, I honestly cannot give you guys a solid reason as to why this CNEY trade did not work. I actually, can't tell you. When you compare it to this MEGL trade, this ticker went from 185 to 218. That's a much higher percentage gain than 0.23 to 0.25. But even MEGL still did not go near its pre-market high. So we didn't see much volume in these accumulation trades today. Some days they're a lot weaker to trade than other days. Some days I look at some accumulation stocks and they start falling through and I think, okay, this is going to be a day that is focused on all these top momentum tickers and they're just going to keep running and running and running and running. Some days they're very, very powerful and we end up seeing one accumulation ticker that just, ends up accumulating like this. I'm able to get an entry in 23 and it would just keep going all the way up to 30 cents, take the volume away from every other stock on the day, right? So it really differs by the day. And I tell people a lot of times, okay, you're focused on the level 2, you're focused on the tape, the volume. You need to be focused on the overall market. That's where it is. The consensus, what the market is trading like. What's the theme of the market? Is today based on penny stocks, just pennies, sub $1 stocks, because that was the theme last week. We had a bunch of stocks that were at 20 cents, 30 cents, 40 cent tickers just absolutely skyrocketing throughout the day. Some days accumulation isn't working as well. Some days we're just, the top gainers are just ripping and they're holding the volume throughout the whole day. You need to look at what's happening throughout the day and base your trade off of that. And I think because today we had a couple different high momentum and high volume tickers just absolutely keep sending through the first half of the morning, we were not able to see as much volume go into these accumulation trades. We did have pretty solid moves. If you're watching these early, you're watching these accumulation tickers like I am, you would have been able to get very solid moves here, even though I like to personally hold for longer because a lot of times it's very well worth it. If you're trading with very tight risk to reward, you could have easily taken 10 to 15, almost 20% profit on MEGL, for example, today, which is what Minnie did. But yeah, guys, that's about it for this video. I've been talking for around 10 minutes now. I think my editor will chop up some of it, but I have more videos on this. If you go down in my YouTube channel, I have more videos describing this specific exact strategy. It works amazingly for me. My team notices it almost every single morning. I am always watching these accumulation tickers while everyone is focused on the volume. I apply my swing trading knowledge to these day trading strategies and I'm able to come up with something that really gives me an edge over everyone else because I'm able to find tickers that nobody else is looking at because they think they're dead, right? Every retail trader, the average retail trader is looking at this. He sees it break under 22. He's thinking, okay, it's done. It's coming down. I'm going to focus on where the volume is, right? But what they don't notice is that this is where liquidity is grabbed. This is where real buyers are stepping in for a run. And this is where you need to be watching. While everyone else says, oh, I'm not watching this, it just came down. That's where you got to be watching. For example, MEGL as well crashed all the way from $2 to 168. Massive lower wicks. Buyers swept this dip, accumulated around this 170 area. Now, if you guys are asking me, oh, give me specific examples of what accumulation is, here's a beautiful example for you guys as well. This MEGL ticker right here, this is accumulation. This is exactly what accumulation is. We are trading in between a range beautifully, and then we end up breaking out of that range and getting a very nice breakout trade. What you want to do is you want to time the volume rotation from these highly popular and high momentum trades, when they lose their volume, they lose their momentum. Volume is looking to enter into a new stock. And if you're watching these accumulation tickers and they're prime and they're ready, when the volume drops from the high momentum trade, you get in. Volume will transfer over if it's the right ticker. And a lot of times, this is exactly what happens during the trading day. I'm able to profit off of this. I'm looking at these trades from very early on in the morning. I identify in pre-market what I think is going to give me the highest chance, the highest probability of being an accumulation trade. I watch it for the first 30 minutes of the market. If it sets up in the way that I want it to, I strike, right? And this is my trading strategy. This is what I do every single morning. I'm usually done trading within the first hour. I have some losing days. I have some days where I don't trade at all. And I have some winning days. And this is how I'm able to stay very, very consistently profitable trading. I hope you guys learned something from this video. I will see you guys in the next one. Peace. Let me know in the comments what type of content you guys want to see. If you guys enjoy seeing this content and want a deeper dive on this type of stuff. If you guys want to see more day in the life type of videos, then also let me know. Peace.